So the purpose really, as we said already, is to is to talk about finance, access to finance, and particularly startup loans, which is what we at the British Business Bank look after. So what we thought we'd do is give a relatively quick overview of sort of the bank, who we are, startup loans, who we are, how that works, to put it into context, and then perhaps I'll say a few words around sort of broader access to finance, sort of for businesses, which are probably relevant for any business, but particularly for those at the sort of the earlier end of their journey. And then we'll sort of take some questions and try and see what other areas we can help with. So the British Business Bank is who I work for. So I'm the Managing Director for Small Business Lending at the British Business Bank. And the British Business Bank is the government's economic development bank. So our role is to effectively support SMEs in a number of different ways, and particularly where the mainstream market, financial services market, is either sort of not fully functioning or potentially there's gaps in the market. And so our role is to come in and try and provide funding in a lot of scenarios or products to fill that gap, or to help SMEs where potentially, as I say, they can't get access to finance in the regular way. And startup loans is one of the products that we offer. Startup loans has been going for 10 years, over 10 years now, approaching £1 billion of funds that have been lent. And over that period, what we've been doing is evolving the scheme, but actually the core of it's been remaining pretty constant throughout. And so what startup loans is, it is a loan. It's actually a loan for an early stage business, or a business that's up to 3 years old. It's actually a personal loan for business purposes. So we lend to the individual for them to put the money into their business. And we sort of like to think of ourselves as the sort of the friends and family for those that perhaps haven't got friends or family that have got the funds to put into a business. So essentially trying to come in and be that support infrastructure, that supportive sort of organisation to allow funds to be put into the business. I think it's also important to say that we're there for support infrastructure as well. So a key part of what Startup Loans provides is not just the funding. Actually, I think the support is, to my mind, almost the sort of the bit I'm most proud of Startup Loans, which is the support we try and wrap around the entrepreneur, both pre-drawdown of the funds and then post-loan. And I'll say a little bit about that in a minute. But if I come back to the funding itself, it is a loan. It goes through an application process. It's not a grant, so it is ultimately sort of public money that we're providing. So we have to kind of make sure that we're taking risk, and it's absolutely right that we take. One of the reasons that we're filling a gap is that we'll take a little bit more risk than a mainstream entity will. But equally, we won't take too much risk, because obviously we need to try and make sure we've got a fair to good chance that loan is affordable, that the business is viable, and that ultimately that business launches or is generating sufficient cash to repay the loan, therefore recycle the fund, and then obviously lend it on to the next business. So we do have a credit process, but key within that credit process is people. So there is an automated element up front that does some credit checks, but the majority of businesses will get through that. And then we have our business advisors then step in. And the business advisor's role is to talk the business, to understand what the idea is or what the business is trying to achieve, and actually help that business get credit ready. And I think, as I said earlier, that's one of the bits I'm most proud of, is that for a lot of startup businesses, there may be real expertise in a particular area, or great idea, or there's some sort of skill set that the entrepreneur's got, but actually they may not have borrowed funds before. Some have, but many won't have done, and may not have started a business before. So the business advisor's role is to really work with the entrepreneur, to talk about the business plan, talk about the business, talk about how does the cash flow going to work, explain some of these areas, explain some of the requirements of how to put an application together, and then move the application towards credit approval. And that sort of pre-loan support is, as I say, something I'm sort of very proud of, and from the feedback we get from our applicants, is something that's really appreciated. It's the fact that there's someone there that can listen, that won't just run it through a machine and just say yes or no, will actually spend time to understand the business. It helps us make a good decision, to make sure that we understand the business, and we understand, as I say, that the loan is going to be affordable. But also, there's lots of evidence that it helps the applicant. because it helps them understand, get a better understanding of their business and really sort of dig into some of the things around, okay, what are the key factors that's going to make this business successful from a generation of cash and that ability to borrow money. I think it's also quite important that quite a few people through that process actually make the decision to back out themselves, because it may be that there's a great idea, there's a great concept, but again, spending the time with a business advisor, for some people, they kind of come to the realization, you know what, actually right now it's not quite workable, or I need to go back to the drawing board and just reimagine this business. And so sometimes that process can take, you know, quite a bit of time. And while obviously we want businesses to get their funds as quickly as possible, sometimes the time invested is really well worth that commitment. And I sort of always sit and think that I was sitting next to one of the business advisors a while back, and they let out sort of a whoop of joy, and obviously asked what was it, and she said, well, it's a business I've been working with for 18 months, and they finally got a credit approval, and actually the business, we put it through the process 4 times, and actually we've got it right. And of course you don't want most to take 18 months, and of course you don't want to go through 4 terms, but actually I think that's the real value of having someone talking to you and the applicant coming back to us and backwards and forwards. So I think that's really important. The loan itself, it's a relatively simple product. It's up to £25,000, so it's a small loan to sort of inject that money into business to get it up and running. It's £25,000. There's no fee involved in the loan, and it's a flat rate, so it's a fixed rate at 6%. And that 6% has been the case ever since the scheme launched. There are some options with the loan, so you can do what we call sort of tranche loans, but effectively phase the drawdown, so take the money in chunks rather than all up front. Quite a good idea to sort of minimise the upfront costs, sort of take the money when you need it. And it is possible for borrowers to come back and get a second loan once they've taken the funds. The other part of the product, which I think is really, you know, again, I think really important, is the post-loan support. So we provide support once the loans draw down in a host of different ways, but essentially to try and provide mentoring, try and provide sort of digital resources and training material to help the entrepreneur sort of build up their skill set. And also when they come across a particular scenario that they hadn't anticipated, or a particular challenge or a particular opportunity, that there's a support infrastructure there to give them every chance to sort of succeed. So for example, I'll just give one example of the numerous different bits of post-loan support that we provide. We have a program called Learn with StartUp Loans, which is a partnership with Open University. And essentially it's a sort of curated collection of training courses, digital learning provided by Open University. Some are the training courses that they provide as part of their other sort of programs. Some is training that we've developed with them and we've sort of co-created. But essentially training courses that go from sort of 3 or 4 hours up to sort of 16, 20 hour long sort of courses to really focus in all the different areas that an entrepreneur might be needed to explore, sort of marketing, business planning, cash flow, well-being, sort of legal issues, etc. So there's a whole host of sort of material there to support the entrepreneur. So in short, as a scheme, it's very much designed for startups and early stage businesses. The product itself is, as I say, relatively simple. It's a term loan taken over 5 years, fixed interest. It's important to say, as I say, there is a credit process. We do approve these loans, so that does mean we will reject some, unfortunately. But it's important to make sure that this is affordable, that there's a fair chance that the business is going to be able to generate sufficient funds to support itself. And as I say, the bit that I'm most pleased about, and I most sort of get most from, is that wraparound support for the entrepreneur to give them every chance of success. If I just broaden it out before we go to questions about sort of access to funding more generally, I think the main thing to say is that over the last sort of probably 10, 15 years or so, there's been a big explosion of different organisations and different products and different sort of types of funds that you'll hear sort of spoken about. And so there's a lot more than there used to be when it was tended to be sort of the big high street sort of lenders, although they are still, you know, very important sources for funding. But there's a whole range of different types of product and types of organisations to go to. I think the main thing when it comes to access to funding, and I think I'll kind of almost open up with a question that's a regular question in a moment, but is making sure that the entrepreneur is aware of the different types of funding that are available, and also doesn't necessarily take the first one that they can get their hands on. And I think the reason for sort of saying that is it's really important to try and think about, what do I need money for, and matching the type of funding with that particular need. So, for example, quite often you particularly when in previous roles where we were looking after sort of big relationships, populations where you would talk to them at various stages in the journey, whereas obviously startup loans we're at that particular point. But a lot of businesses, they will start with some money, not all do, but they'll have some money that they've raised themselves, or they've got from friends or family or whatever it might be, and they've got some money, it's their own money. And they quite often will burn through that money first. So we'll sort of spend that money first, and then it's like, okay, I need some more money, and then I'll go and sort of see if I can get a loan or go and see someone else. Quite often I'd say that's probably a mistake. I think actually what we should be saying is, what are you needing to spend money on? Because some things it's easier to get funding for than others. So, for example, if a business is launching and they need a van or a vehicle or a piece of equipment or a piece of machinery, those sort of things are really good to match against a loan, because you've got a piece of equipment that's going to last a certain number of years and give you revenue over a certain number of years, and you can take a loan for repayments that almost match the revenue that piece of equipment or car or whatever it might be. And also there's vehicle finance organisation and leasing organisation, so on and so forth, and it's relatively easy to get. Whereas research and development or product development or sort of investing in things that are sort of have the potential to create growth but aren't defined, those sort of things are much more difficult to get funding for. You know, it's sort of, you could argue it's sort of almost pre-launch type activity. That's the sort of thing you can use your own cash on. So a question that we regularly get asked is, you know, what's the right sort of funding for my business? And my answer, as much as yes, I think I hope startup loans is very suitable for many of you, but my answer would actually be, well, it should always be a blend. Always think of it as a blend of funding or a blend of investments into your business wherever possible, and think about a loan for certain purposes, sort of working capital funding like an overdraft or other sort of, you know, if you can access that sort of funding, and then sort of friends or family and, you know, personal investment if you can raise that as well. And actually it's a blend of funding is usually the right funding for business, rather than a loan being the answer, or an overdraft, invoice finance, or whatever it might be. So I think from a funding perspective, I would always say the key thing is think about it as a blend, if you can, but most importantly, think about, what do I need the money for, and what is the right type of product or opportunity or investment to match with that particular piece of funding. So that's all I was going to sort of draw out to start with. And I know you've got a couple of questions in advance, and then perhaps we take any questions that come through. Is that best to go from there?
Yeah, that's brilliant. Thank you so much, Richard. I know that we had one question about their top tips, but I feel like we've already covered that one, which is fab. My question for you is, do you have any good examples of businesses that have taken out a loan previously that you could share with everybody?
Yeah, well, like we've sort of over 100,000 now, so lots of businesses have taken loans out with startup loans. Important to say they don't all succeed. So I think, you know, it's a sad reality. They don't all succeed, and that's why it's important, as I say, to make sure that we put that effort in up front to give us a fair chance of supporting a business with a good opportunity to succeed. But clearly, lots of them do and have succeeded. There's quite a few. So a few that always stick out to me is a particular business that it's one of our ambassadors actually. So I won't go into who they are, because I think there's a few that perhaps I'll call out that aren't officially, we're not signed up to. But there's one particular ambassador of ours that actually took the smallest amount of money they could possibly take from us, because they didn't need money. They actually wanted the support, they wanted the mentoring, and I just thought I'd flag that, because it's sort of probably one of the reasons I'm sort of most proud of that side of our business. But you know, it's an immensely successful business that's grown, that's sort of it's a really big business now. But when I spoke to them and said, why did you take a startup loan? They said, actually, I didn't need the money. What I really needed is the mentoring, the support. I needed to get help to help me grow the business. So I thought that always stuck out to me. But the sort of the businesses that I think have taken the money and probably sort of done, obviously there's a huge amount of variety, but others that stick in my mind are, and there's a business I went to see that was an individual that come out of the armed forces, and actually quite interesting, because quite often people know the business they want and then try and work out what to do with it. Actually, this individual came out of the armed forces and they knew they wanted to be an entrepreneur. They knew they wanted a business. And what they didn't know is quite what business they wanted to go into. But they came at it from an angle of, well, if I know how much money I can access, I know if I put together the money that I've got, if I understand the requirements, the different, if I need to buy equipment, can I get access to funding for equipment? Can I get access to working capital, et cetera, et cetera? So he really worked out what's the market or what's the industry offering a startup business. And as I said, there's not a huge amount of options, but went and explored that. But then went and found a brewery and decided to buy a brewery, and then engaged us. And it was sort of the perfect opportunity, because what he needed was equipment. I'm not an expert at how you make beer, but yeah. Equipment to be bought. And so it was the perfect partner for startup loans, because we could provide a £75,000 loan. He put some of his own sort of money that he had from savings in, bought the equipment. Perfect sort of thing, because that equipment had quite a long lifespan. You could really match the equipment sort of generating of cash with the loan. And it's just a really nice, successful business that's done really, really well. And to me, that's always like the most traditional source of someone that says, right, I know what I'm going to do. I know I need some equipment, matches perfectly. I think the other end of the spectrum, I had the great fortune of speaking at one of your events very recently, and was speaking to someone who said, startup loans saved my life. And that was like, wow, okay, that's a very big statement. And again, I can't obviously give the details of the individual, but they talked about the fact that they'd gone through a very difficult period, had a number of sort of personal sort of issues and situations that had given them were in a difficult place, but they knew they had the energy, and they knew what they wanted to do, and they knew that being an entrepreneur and starting business was going to be the way they could break out of that sort of situation, that cycle, and give themselves economic security. But because of their circumstances, it was really difficult to access the banking system, difficult to access, and definitely difficult to access finance. But the fact that we're able to come in, have the conversation, have somebody talk through what they were trying to do, understand it, rather than just putting it through a machine, meant that we're able to fund, I think it was actually a relatively small amount. I think it was sort of £4,000 or £5,000. And actually that person is now successful, got a business, got a profile, and it's sort of, and I'm sure they're massively overstating it, but that sort of emotive comment, I think, is at the heart of startup loans, that yes, we're there for the traditional sort of, not traditional, but the more logical kind of sort of scenarios, but actually we're there for those that struggle to access the mainstream system. And as I say, to sort of help people. And the final point on that I'd make is that for us, it's as important to who we lend to as to lending the money. And what I mean by that is we're obviously targeted to get a certain amount of money out into the ecosystem. We have targets, we need to deliver a certain amount of loans, but we're also judged on, are we providing, it's not about necessarily always providing money to the easiest route. It's making sure we have to, part of our role is to explore communities and subsets of business communities and parts of society that are furthest from finance, those that find it most difficult to access finance. And that's a key part that we play as well.
Brilliant. Thank you so much. I knew we've got like another question, but I see quite a few questions coming through actually from the audience. So I think if it's okay with you, I might just move on to the Q&A, just so we've got enough time for them all. A lot of them are coming through the chat. So what I'm going to do is I'll start off with the ones that we've got in the Q&A function, and then we'll move on to the chat questions. So our first question is from Tim. It says, we're an early stage business looking to raise funds for the next phase of growth, but too early for venture capital funding. However, we envisage there will be funding required for subsequent future stages in development for our business. Can we still apply or qualify now for a startup loan?
If the business started up in the last 3 years, yes, that's really the sort of the principal sort of restriction, up to a 3-year-old business, that's startup loan space. I think one thing, again, won't go into the details. One thing to say is, if the business is, what is important though, it is a loan. It's not equity. It's not other types of funding. It is a loan, which means we need to understand the link between the business and the generation of cash to generate a revenue to repay the loan. And we do sort of 12 months interest only periods and so on and so forth. So there is some flexibility. So if it's a business though that isn't in the actual state, if it's still in a kind of creating itself stage, if I put it that way, if it's still in creating its IP or creating itself, and it's using funds to create, and it's not yet revenue generating, that's more difficult for startup loans. But if there is revenue generation, absolutely. I'll just also point out though that the bank has another resource, if what I'm saying perhaps doesn't sound suitable, is through the bank's website. If you find the Finance Hub, so there's a thing called the Finance Hub that's in the British Business Bank works. And what that is you basically put in the type of business you are and you answer some questions. And what the Finance Hub tries to do is point out through either the other products and services and relationships the bank has to sort of what other sources of finance there might be. So even if startup loans can't support, I would still explore the British Business Bank's Finance Hub, because the purpose of that is to try and help businesses access the funding they need. But 3 years old is really the main criteria. 3 years old or less.
Right. Okay. So I think that's also answered Keith's question about being a startup base from London outside the 3-year gap. So I'll move on to Ash. Does the founder need to have another source of income to support the repayment of the loan during the early stage, would you say?
Doesn't have to. So one of the things we do, but what we do is we do talk to the entrepreneur about almost what's their fallback position. And the reason for that is, again, because not all businesses are successful. And it's part of that kind of trying to understand where the entrepreneur is coming from. And also, if they borrow some money, and particularly as it's per personal loan for business purposes, if the business doesn't succeed, what is their fallback options? How easy is it for that individual? Because again, what we don't want to do is get people into debt that ultimately gives, they can't afford and is difficult. So we do talk to entrepreneurs about their ability to generate income outside of the business itself, but it's not a condition that they have to do that. And I think because of businesses are all very different. Some people it's sort of up and running and we're just 100% committed. Others are sort of, other types of businesses that are on the side, side hustles and other things. So I think we'll talk about all of that side of it, what the individual's doing, what their plans are they working, they're not working, but it's not a condition that they have to. It's just to make sure we understand sort of the viability of the business, the affordability of the business itself, then also what's their backstop if the business doesn't succeed.
Brilliant. Okay. And we've got one from Ruth saying she's got a working business model and a boutique. As a startup, can she apply for a loan to move her business into a more affluent area with higher footfall?
There's nothing stopping that bit. I mean, that sounds like a good, a logical business plan. So yeah, there's no reason that there's nothing to say that couldn't be supported by a startup loan. Again, it will come down to, if it sounds like the business is up and running, which is great. If it's older than 3 years, that might be the restriction. But if it's less than 3 years, up and running, it's generating revenue. Well, then we've got over that first hump of launching a business and revenue generation. And if there's a logical business plan to say, well, actually, we can be even more successful by moving, then that sounds like something startup loans could and should be looking to, at the very least, engage and understand a bit more and hopefully support.
Brilliant. And we've got two from Gaston. We've got this first one, which is, are there any sectors that are excluded from applying for these loans?
It's very sector agnostic. So the idea is we intentionally should be sector agnostic. There are a few sectors that are what we call restricted sectors. That they're probably, well, maybe they're not, but in my mind, they're sort of obvious ones. So firearms, sort of military kind of things. I mean, whether you would ever get one that was £25,000 or less, probably not. But there are a very small number of restricted sectors, but they're kind of in that sort of space rather than, more regular sort of sectors. So broadly speaking, sector agnostic. If you're not sure, ring us up. Ring us up and ask. But the vast majority of sectors, absolutely, we're ready and able to work with.
Right, brilliant. And we've got one from Toby. What revenue does a business need to qualify?
Again, no specific answer. So, and actually, right now the business could be not generating revenue and we would still qualify. But what we have to do is understand, okay, so the business is right on the cusp of launching. We're right in that startup moment. But can we get comfortable that we put the money in and the business launches and we can see when the revenue is going to start being generated in the near future to meet the repayments? So that's the key. If someone was to say, well, I need the money, but it's going to be another 2 years of research and development before I'm ready to launch, then that's probably one we're not going to be able to support, because that means it'll be, a couple of years before there's any revenue. But if someone's saying, I've got everything sorted, we know exactly what we're going to do, we need the money sort of now, and then we're launching and the revenue is going to build up, and perhaps have an interest-only period for a couple of, for a short period, but then the revenue is going to start being generated in the next sort of 2 or 3 months. Brilliant. That's the sort of business we can support.
Great. And would you say there's a minimum and maximum amount for startup loans?
The maximum amount you can borrow is £25,000. So it's £25,000. Now, there is a sort of a small point of difference on that, is if the business, if it's supporting a limited company, up to 4 directors can take a bounce back loan. So essentially, if you've got 4 directors of a company, we can lend up to 100,000, but it's £25,000 maximum per loan.
Brilliant. And we've got a question asking you to explain a little bit more about the 3-year policy and what exactly that means.
So it's a good question. There's always a little bit of greyness around this. So again, if anybody's not sure, call us up, and or put you probably the best way is almost like to register through. You can register through the website. Register. We take some details and then start the process. And then obviously we can engage if there's a particular problem around the years. But broadly, it's if you take a point where the business starts. And when we say start, we don't necessarily mean the limited company is registered, because obviously sometimes you register a business 2 or 3 years before you actually start. But it's the point at which the business starts, which is sort of generating some revenue, or opened the doors, or the website's gone live. And so there's a little bit of greyness about that. But essentially, we're relatively flexible. Not say flexible, but we're sensible about this. But there's usually a point where you can say, do you know what, that feels like when the business has started, and so the entrepreneur can say, look, that's my evidence. I started trading there because that's when I opened the door of the shop, or the first check came in, or whatever it might be. And then really it's just 3 years from then. So the starting point, there can be a little bit of greyness, but for most businesses, there's quite a clear point when they start.
Brilliant. I've got quite a long one here. Let me just scan through. She's got 2 questions. She understands that credit checks are needed. The first question is, how does the process start in regards to pre-loan process, support, mentoring, and understanding how much a business needs? And the second one, credit scores. Someone told me that loans should be taken out by the company and the company has a credit score, but Richard mentioned about personal credit loan. Could I ask what a business credit score is and whether that's relevant? Oh, have we lost him? Richard, are you there? Oh, typical.
I think we've lost him.
Oh no. That is not good. Let's have a quick wait, see if we can kind of get him back in the room. Just when we're on the Q&A as well. Typical, isn't it? Right, let's see. We'll give him a couple minutes, see if he can pop back in. In the meantime, I'll just run through all of the questions, get them in a good place for Richard to answer if he is able to rejoin. So bear with us, guys. Sorry for the technical difficulties. He's back. Hi, Richard. No worries at all.
We're still live.
We're still live.
Okay, I got half the question. I got the question about credit searches and credit scores, but perhaps you could repeat that question.
Yeah, we'll start with the first one because it was quite a long one. how does the process for credit checks start in regards to pre-loan process, support, mentoring, and understanding how much a business needs?
Yeah. So first thing to say is a lot of the support you can access without taking a loan. So again, if you go to the Startup Loans sort of website, things like even the loan with startup loans, you don't actually need to be a recipient of the loan to access that. And a lot of the collateral is all there and available. So the credit check does not sort of preclude anybody from accessing quite a bit of the material, definitely pre-loan. The way the credit checks will work is essentially when someone comes to us, they register and give us some sort of basic information. And that first sort of check is really to make sure that we do have some policies about certain sort of things we won't do. As I mentioned before, there are some restricted sectors, so we try and filter for that. But then there is also a credit check done. The best way of describing that is we do, as I said earlier, take more risk than the mainstream would, because otherwise we wouldn't be filling a gap. But the reason it's difficult for high street lenders to support startups is because they are riskier. They have a higher failure rate. And so we do have a credit check, but essentially it's we take more risk than the mainstream will. So the majority get through that process. The majority of applicants get through that process, and then that's when the business advisor then kicks in. And from that point on, it's not a sort of a credit check process or a score or sort of a formal sort of computer system that's ultimately making the decision. It's the business advisor working with the applicant, building the business plan, getting it credit ready, and then submitting it to our approval team, who will then work on the applicant and to make sure we're comfortable that we think there's a viable business and it's affordable. Hopefully that answers the question.
Oh, muted myself. Let me just scan back up because I've been copying and pasting all these questions and I'm getting myself all confused. Right, so the second part of that question is about credit scores. Someone told me that loans should be taken out by the company. The company has a credit score, but Richard mentioned about personal credit loan. Could I ask, what is a business credit score and is it relevant?
Not relevant for us, but I'll try and explain the difference. So because when a business, a limited company, so I think we talk about limited company. So if you're going to run a business through a limited company, and apologies if this is too basic for anybody, but a limited company is like a separate legal entity. It's almost, if you almost think of it as an individual, it's not an individual obviously, but if you think about it as it's an entity. And so once that limited company is formed, it's now got its own sort of legal status separate to you as an individual. So you'll be the owner, the shareholder and director, no doubt, of that company. So you're now working for that entity, essentially. You own it, but you're also working for it as an employee. I'm slightly simplifying, but I think that's probably a good way of describing it. So when that entity is created, that limited company starts to build its own credit history. And particularly if the business starts to borrow money, it starts to build up a credit history. If it repays money, it builds up a credit history. And also, when it gets to a certain size, it needs to submit its accounts to Companies House. But it needs to submit its accounts to Companies House. You start to build a track record of the limited company. And that's sort of what we're talking about here, is that the business, the limited company, has its own credit score and its own credit history, et cetera, et cetera. So once a business is trading, and it's been trading for a bit, it's built up some credit score, that's what sort of your traditional lenders will quite often use. So they'll effectively use that data that's held against their business in all sorts of different sort of ways, and they'll score it. They'll use a computer algorithm or what have you to make a decision about, is that business robust enough to support the borrowing it needs. With startup loans, because the business hasn't started yet, it hasn't got any credit history, hasn't got any sort of anything to sort of almost look at. So that's why what we do is we do a personal loan for business purposes. Because it allows us to sort of lock the loan into an individual that exists, as I say, sometimes before the limited company is even created. And also, it does give us a personal credit history to check against. As I said, we do some checks. And if there's, sadly, if someone has a very, very poor personal credit history, we will likely decline because there's a sort of a degree of evidence of sort of poor credit control or history. Now, that's difficult. and we have to sort of manage that. And as I say, we will take more risk than the mainstream. But that's the difference. The credit, there is a credit history and a credit score for a business, but that will be through the limited company. But for most startups, that limited company either doesn't exist or hasn't built up a credit score. Hence, we can't lend against that credit score.
Brilliant. Yeah, that's really good. We did have another one, actually. I'm just going to skip past a few just because I think this one's quite relevant. But someone that is saying they have a poor credit rating as they've never had a credit card. Is that something that's going to impact their ability to get the loan?
It depends what they mean by poor. So when you said poor credit rating, I was in my head, if someone's had a lot of missed payments in the past and had sort of loans that perhaps failed or missed credit card payments, etc., that might have a negative impact, because that would be a sort of a poor credit history in the sense that they've had financial problems in the past. But what you said there is haven't had a credit card. That is less of a worry, because yes, there's no credit history showing of having had a credit card and made repayments, but actually that's not, I would always describe that as a neutral. So I wouldn't, that wouldn't worry me, that particular scenario. What's more of a problem is if there's missed payments and loans that are defaulted or what have you in the past. If that makes sense.
Yeah, brilliant. Right, so is the loan interest-free? What is the minimum loan one can take for just the mentoring opportunities? And in terms of the mentoring opportunities, are there any education qualifications included?
Yeah, so going backwards, so the open universities or lower startup loans, they're not formal qualifications in the sense of sort of degree or hires or qualifications like that, but they're training for the individual to sort of improve their skill set. So it doesn't result in a formal qualification. We launched the Open University Partnership about 18 months ago, and actually bringing it to the next stage is to formalise it into qualification. So that's something we're looking at now. So hopefully in the near future, it will result in an actual formal qualification. But at the moment, it's just training for individuals to the benefit. The maximum was £25,000, as I've said. So the minimum is 500, and there was another third question in there. There's a third bit to that one. I can't remember what it was.
Let me go back. No, it's okay. Yeah, I think it was whether it was an interest-free loan.
No, it's not interest-free. It's a fixed rate, so it's a flat 6%. So it's a 6% loan.
Okay, brilliant. Right, let me find quite a few of these have already been answered, so I'll just try and find a relevant one. Is it possible to get a loan to help employ staff to help grow and diversify the services that we offer? Yeah, I think that's. I'm also keen for business mentoring before we grow further.
I guess a lot of these sort of questions, is it possible? I think that obviously all situations are unique, and sort of that's why I had that business advisor conversation to really understand. But I would say the key thing to be able to demonstrate is, if you sort of take back from exactly what you're talking about in the situation, is it's almost that simplicity of saying, I need to borrow some money, and I'm going to invest that money into X, whatever X is. That might be, as you say, training up staff, it might be getting new stuff, whatever it might be. But then is there a link from X to, and that's going to generate more revenue, which means my business is going to be successful and I can repay the loan. So if you boil it right down, those sort of questions, can I do this? Is there a really clear link between you're going to spend the money on something that's going to drive the business forward and generate more revenue, and can we get comfortable that that revenue is going to be arriving in a certain sort of timescale? So I think that's the way to think about it. About what I need money for, is it going to generate me more revenue in a relatively near future?
Right, brilliant. I will just take one more question because I am conscious we've run out of time. Let me just see what we've got here. Is there a mentoring on how to spend your loan in the best ways to generate revenue? As a startup wanting to grow, I feel I struggle with where to spend the money to take the next step to grow. I know there's no set rules, but do you have any advice in general for steps to taking growth?
Yeah, so the part of the advice would be what I mentioned right at the beginning was around second loans and tranche loans. So they're quite useful for that, because actually what you can do with a tranche loan is almost take the minimum amount you need to sort of start the business, and then work with your mentor and work with the post-loan support to work out the growth opportunities beyond that. and then take additional chunks as you go down. So, and the other option, if you don't want to sort of restructure like that, is you take a smaller amount, and then we can provide a second note once you've sort of launched, got a feel for things, got things going, and then spotted the growth opportunities. So avoid taking it all in one big lump, because actually you have to pay it all back. Better to sort of do it in pieces. So I suggest that, and definitely work with a mentor. I did see another question pop up very quickly. It said, can we lend to sole traders? Absolutely. Although I've talked about limited companies, if someone wants to borrow and operate as a sole trader or a partnership, absolutely fine as well.
Great, thank you so much. I think we'll have to leave it there. So if anyone else has got any questions that they'd like me to get Richard to answer, please do email them to me at lois@ideasforums.com. I believe if you guys want to carry on with your British Business Bank journey, you can explore the startup loan information on their website. I will send a follow-up email a little bit later on today with a little bit more information and a few links as well that we've discussed during the Q&A. Other than that, I think that's everything. Thank you so much, Richard, for joining us. And thank you to everyone thank you to everyone who has attended. Please do get in touch if you've got any more questions or would just like a little bit more support.
Thank you.
Brilliant. Thank you so much. Take care, everyone. Have a lovely day.
Bye.
Thank you.
Bye.
Bye.
Thanks.